Welcome back to the Gold IRA Blueprint podcast, everybody. You know, uh, Today we're going to do a deep dive into a topic that could really, I think, change things up when it comes to your retirement portfolio, investment platforms. Specifically, we're going to look at SeedInvest and some alternatives. Now, these platforms, they give you a chance to get involved with startups, private companies, things that, used to be only for a select few.
Yeah, what's interesting is it's opening up all these opportunities that were only for, the high net worth individuals, venture capitalists. Like it's really democratizing access to investment possibilities.
I agree. And speaking of opening up opportunities, if you're one of those listeners looking to add security to your retirement savings, don't forget to grab our checklist. It's totally free at goldirablueprint.com/exclusive. It'll guide you step by step in choosing the right Gold IRA company. Okay, so SeedInvest. Now, for those who aren't familiar, basically what they do is they connect accredited investors with these startups and private companies looking for funding. It's a chance to get in on the ground floor, right?
Yeah.
Of a potentially groundbreaking business. But before we get into the nitty gritty, could you maybe just give us a little more context? Like, what is SeedInvest? What makes it stand out?
Well, SeedInvest is an equity crowdfunding platform, okay? It acts as a bridge between the investors and the startups. What they do is they allow individuals to invest in these companies in exchange for equity. Now, what really sets it apart is they have this rigorous vetting process. So they don't just list any company that wants to be listed. They carefully select them based on, several criteria, like the strength of the business model, the experience of the team, the growth potential. This process is all designed to mitigate risk, to give investors more confidence in the opportunities they're considering.
So it's not just about, like throwing money at the next shiny object. They're doing due diligence to make sure that the companies they're listing have real potential, right?
Absolutely. And that commitment to quality is why, SeedInvest has gained a lot of recognition. Even Ryan Feet, SeedInvest founder, has been featured on Mad Money.
Wow. Yeah, that's not just an endorsement. That's a big signal. They're doing something right. Now, you mentioned that they have these criteria for companies that are listed.
Yeah.
I'm curious, what kind of companies are we talking about? Is it just tech startups, or is there more diversity?
There's a lot of variety. You have your classic tech startups, of course, but they also have, SeedInvest features companies from all different sectors like, real estate, food and beverage, consumer goods, even healthcare. They also have established businesses that are just looking for expansion capital.
So there's potentially something for everyone. It's a lot more diverse than I imagined. Now, I know SeedInvest's whole model is tied to the JOBS Act. I know it has to do with opening up investment opportunities. But to be honest with you, I'm a little fuzzy on the details. Could you maybe shed some light on that for the listener?
Sure. So the JOBS Act was passed back in 2012. Okay, it was a game changer for investing. What it did was it loosened regulations to make it easier for startups and small businesses to raise money. So before the JOBS Act, investing in private companies was mostly restricted to accredited investors. So these are individuals who meet certain income or net worth requirements.
So everyday investors were basically locked out of those opportunities.
Yeah, pretty much. But then the JOBS Act came along and it changed everything by introducing equity crowdfunding. This allowed companies to raise money from, a wider pool of investors, including non-accredited individuals. So SeedInvest was one of the first platforms to kind of emerge, because of this legislation.
So SeedInvest isn't just giving a platform for these companies to connect with investors. It's actually part of a larger movement, to democratize investment access.
Exactly.
That's really impactful. But I'm still a little unclear. How exactly did the JOBS Act do this? What regulations were changed?
Okay, well, one key change was the creation of what's called regulation crowdfunding, or RED-CF. And this regulation allowed companies to raise up to $1.07 million from the public each year through online platforms like SeedInvest.
Oh, so before that kind of public solicitation was heavily restricted.
Heavily restricted.
So the JOBS Act, what it did was it essentially removed the gatekeepers, allowed companies to bypass, the traditional venture capitalists to reach out directly to individual investors.
Exactly.
That's interesting. Now, this obviously opens up a lot of possibilities for companies and investors.
Right.
But I'm sure there are downsides too, right?
Well, yeah. While the JOBS Act has definitely opened up investment opportunities, it's crucial to be aware of the risks.
Yeah.
Investing in early stage companies, it's risky. And the possibility of high returns, that comes with the possibility of losing a lot too.
Yeah, for sure. So before we get caught up in the excitement of, finding the next big thing, we should definitely talk about the risks involved. But I think that's probably conversation for part 2. Now, in the meantime, if you're feeling a little overwhelmed and you're looking for a secure way to diversify your portfolio, don't forget about gold. Visit goldirablueprint.com/exclusive to access our free checklist. This will help you navigate the world of gold IRAs and choose the right company for your needs.
Right. It's easy to get swept up in the excitement of all these, groundbreaking companies. But we got to remember, not every startup is going to be the next Google or Amazon. Most fail.
So what are some of the risks people should know about with these platforms like SeedInvest?
Well, one of the big ones is liquidity, or really the lack of it. You see, when you invest in a company that's publicly traded, you can usually sell your shares pretty easily, right, on the stock market. With private companies, it's not so simple. It's your investment is locked in for the long term, and there's no way to know for sure when or even if you'll be able to cash out.
So this isn't really a good strategy if you need to access your money quickly.
Right. This is for folks who are in it for the long haul and who can handle some potential losses.
Makes sense. Anything else we should be aware of?
Another thing to watch out for is dilution. As a company grows and raises more rounds of funding, your ownership stake can get smaller. So your shares represent a smaller piece of the pie. That can really affect your returns down the line.
So even if the company does well, you might not get back what you expected.
It's possible. You really have to understand how dilution works before you invest. And of course, there's always the risk of fraud. SeedInvest does try to vet companies, but you can never eliminate that risk entirely. Investors have got to be smart, do their homework.
That's a good point. You can't just take their word for it. Due diligence is important with any investment, but especially with startups.
Exactly. Don't just rely on the platform's vetting. Understand the business, their finances, the management team, the competition.
Okay, so let's say someone's interested in SeedInvest, but they want to look around. What are some alternatives that might be worth checking out?
There are several. AngelList, WeFunder, and Republic, they all have unique things to offer.
Let's break those down, starting with AngelList. What's different about them?
AngelList is interesting because of their focus on syndicates. These are groups of seasoned investors who pool their money and knowledge together. It's like having a mentor in the investment world,
So you're not going it alone, you're joining forces with pros. That sounds like a good way to learn and maybe get better deals.
Exactly. Syndicates have access to things that individual investors don't, and they do a lot of due diligence together. It's a way to use the knowledge of a whole group.
That's appealing, especially for someone who's new to this. Okay, what about WeFunder? What's their angle?
WeFunder is really focused on democratizing investment. SeedInvest is mostly for accredited investors. WeFunder lets both accredited and non-accredited investors get involved.
So you don't need to be wealthy to invest with them.
No. They've lowered the barriers, so anyone can invest in companies they believe in.
That fits right in with the JOBS Act.
Yeah.
All right, last one. Republic. What makes them different?
Republic is all about diversity. They go beyond startups. They have real estate, crypto, even video game projects. It's like a one-stop shop for alternative investing.
So if you want lots of choices, Republic's the way to go. I'm curious about the fees. Are they all pretty much the same across these platforms?
Not really. There's some variation. SeedInvest usually charges a placement fee. It's a percentage of your investment, somewhere between 5 and 7%. They might also take a cut of any profits, what's called a carry.
So the carry is like their commission for setting up the deal.
Yeah. They only get paid if the investment does well.
That makes sense. What about the others?
Well, AngelList syndicates also have carries, but they're usually higher, like 20%. That's for their expertise, WeFunder charges a fee on the money the company raises, somewhere between 5 and 10%. And Republic has a kind of a sliding scale fee. It depends on the offering.
So you really have to do your research on the fees.
Definitely. And you also have to consider your goals, your risk tolerance, your interests. Are you looking for big growth? Or maybe you want to support specific industries. Some platforms specialize in certain areas.
So like any investment, know what you want before you jump in.
Absolutely. And don't be afraid to spread your investments around. Diversification is always a good strategy.
For sure, diversification is key. And while we're talking about spreading things around, don't forget about precious metals. Visit goldirablueprint.com/exclusive to get a free checklist on gold IRAs. Okay, so with all these platforms and choices, it can be a little overwhelming, right? What advice would you give to someone just starting out?
Just ask yourself a few basic questions. What are your goals? How much risk are you comfortable with? What are you passionate about? Once you know that, you can narrow it down.
So self-awareness is important.
Definitely. And don't be afraid to ask questions, Talk to other investors, financial advisors, get as much information as you can.
Good advice. One thing that I find really interesting about all this is the idea of supporting small businesses. It's got to feel good to know your money is helping someone's dream come true.
That's a big part of it. It's not just about profits. It's about being part of something bigger, helping companies create jobs, solve problems.
Yeah, aligning your investments with your values.
Exactly. It's about making a difference.
Yeah, making a difference. Before we wrap up, I wanted to circle back to due diligence. It seems like there's a lot to think about with these investments, especially for a newbie.
Yeah, it's essential. It's like buying a house. You wouldn't do it without an inspection, right?
Right. So besides the basics, like the business model and the financials, what else should investors be looking at?
Well, the management team is huge. Who are these people? What have they done before? Do they have the experience to make this happen?
So it's not just about the idea, it's about the people behind it.
Exactly. The team is everything. Another thing to consider is the competition. Who else is out there? What are their strengths and weaknesses? Does this company stand out?
Yeah, you got to know if they can actually compete.
Right. And don't be afraid to ask tough questions. If you're using SeedInvest or AngelList, reach out to the company directly. Most of them are happy to talk to potential investors.
Okay, good to know. So before we go, I want to leave you with a thought. Imagine you could invest in any startup, anywhere in the world. What problem would you want them to solve? What kind of impact would you want to make?
That's a great question. It really gets to the heart of why we invest. It's not always about the money, It's about making the world a better place.
Yeah, creating the future we want to see.
Exactly. And these platforms give us the power to do that.
And if you're also thinking about adding some stability to your retirement plan, don't forget about gold. Go to goldira.blueprint.com/exclusive for our free checklist on gold IRAs. Well, this has been a great conversation. We covered a lot, from SeedInvest to due diligence to making a difference.
We talked about the how and the why.
Exactly. I think the big takeaway is investing is more than just numbers. It's about ideas. It's about supporting entrepreneurs. It's about something bigger.
It's about taking control of your future, investing in what you believe in.
I love that. All right, listeners, thanks for joining us on this deep dive. We hope you learned something, maybe got inspired.
Keep learning, keep exploring, keep investing.
And remember, the journey to financial security never ends. Keep learning, keep asking questions, and keep making smart choices. Thanks for tuning in. We'll see you next time.